Hello. Thank you. Thank you very much for coming. My name is Federico Variola. I am the CEO at Phemex. We are a centralized exchange based in Singapore and Milano currently, in the top 10 by trading volume and open interest, and in the process of decentralizing, which is the topic of my speech today. So to start off, I would like to give a brief introduction of how exchanges evolved over time. So exchanges launched around 2011, 2012. At the beginning, they were very simple products. They basically offered only crypto to crypto or fiat to crypto, fiat on ramps. We have Coinbase, for example, Gate, and then later on Binance. At the time, offering only spot was enough for the retail users, of course, to start their journey into crypto. As interest in crypto kept growing, we come a few years later to the bull run of 2017, which can be characterized by the prominence of ICOs. There was the ICO mania. Now we know that a lot of those projects ended up failing their promises, and a lot of those charts are not looking very good now. So I would say that a lot of retail traders at the time got burnt with this market. Their experience was not, I would say, positive. Bitcoin crashed by a lot. And so we entered the following stage of the market following 2018, which it can be characterized as a PvP era, meaning a player versus player era. This means that there is no new liquidity coming into the market. There is no new participants joining the market. The existing participants are trading against each other, right? They're all trying to extract value from each other since the industry as a whole is not growing. The perfect instrument to trade against each other is futures, right? Because they allow you to go long, go short, trade the market, whether it's going up or down. And this is the time in which Phemex rose to prominence in 2018. And following Phemex, a few other exchanges launched following the same approach. So we have Bybit, of course, FTX, and Phemex. We launched all in the span of 2 years, which in hindsight was a very positive time to start our products because we were able to catch fully the 2021 bull run with already successful exchanges running. We come to 2021, we have the bull run, of course. I would say that the most characterizing aspects of this bull run was the rise to prominence of the centralized finance, which was very nascent when we started off in 2019 as an exchange. And also, this bull run was characterized by a massive influx of venture capital into the markets, often at very I would say insane valuations for the projects that received these investments. And similarly to what happened with the ICO mania, we also see how in 2021, a lot of these valuations did not end up matching the value of these projects, and a lot of projects ended up failing their holders and their expectations. And we come to the 2022, but the bear market, we're still currently kind of in. The market has become PvP again. There is not more influx of cash coming in from the outside. The participants are trading against each other. So, of course, futures are always a positive and a popular product. But some other products like NFTs and spot trading have suffered significantly from the current state of the market since new projects launching don't get as much attention as they did before. On the right here, you can see the happy flywheel of a, let's say, bullish market. So we have retail interest, which causes a growth in volume, attracting even more liquidity, leading to prices to rise and narratives to take off. Some people believe that narratives come before prices or after, but I argue that generally narratives tend to justify the way that prices moves. So this, I want to go back to a point that I made before about the raise to prominence of DeFi to jump to the next topic about our exchange. So when we started off as an exchange in 2019, DeFi was a very early concept, and not many people were hopeful in DeFi as a whole. Even though theoretically it sounded very interesting and also feasible, at the time a lot of people were skeptics about how these layer ones could process the amount of volume that actually was required for this industry to scale. But I believe that DeFi achieved a lot of successes over the past couple of years. And here I'm listing a few successful projects, AVE, Curve, Trader Joe, Arbitrum, GMX, DYDX, some of them have booths here. I think among the successes of DeFi, there are several points. For example, DeFi introduced a wide variety of products into the market which were ready to use right away. So for trading, swapping, borrowing, lending, they built a very robust and also very accessible infrastructure to anyone with a MetaMask, right? And they fostered a sense of shared governance and ownership into their users. So compared to centralized projects like exchanges, for example, the centralized projects have this additional value in which the users participating into the protocol feel as if they were almost shareholders of the project they are working on. And also, I believe these projects have shown some sort of strong resilience to crashes. I think they were properly collateralized. If we look at AVE curve, there have been problems, hacks in the past, but I think these projects survived the test of time so far. And I think it's a very positive aspect in terms of Lindy terms for the future. Another interesting aspect about DeFi is that it helped the creation of digital identities on-chain. Meaning that since most people are in crypto for financial reasons, right? To trade, to make money. So it's natural that people that are successful in these markets tend to gain some sort of personal notoriety into the industry, right? And having all these trades, portfolio, NFTs on-chain allows people to generate an identity for themselves on-chain, which represent their value within the industry. So I think that these decentralized protocols had a very significant role in shaping these new digital identities to the point that some traders are well known in the industry just for the big trades they take on-chain. Now, what are some of the shortcomings of DeFi? I think it's fair to say that out of the tokens that launched in 2021-22 had very extractive tokenomics, and meaning that the valuation at which they launched were very high, and the tokens were sold to keep the project running, while the venture capital invested in the projects were able essentially to cash out against retail users. Here we can see a chart in red at the top. Could be any of 1,000 of DeFi protocols. I chose a random one. You can try to guess, but there's literally pretty much all look the same. This one specifically is from Radium in the Solana ecosystem, which was almost kind of famous for how high the valuations were compared to how much the product were actually used. So these protocols often didn't have any real revenue. They were using just the tokens, selling the tokens in order to stay afloat. And of course, without revenue and only with the goal of receiving venture capital, projects starting to imitate each other, copying each other on different chains, different layers, all the same projects, just because the end goal was not to actually build a user base, but just to build a serviceable protocol, just to reach some seed round, get the capital, and then cash out, and that's it, the projects are abandoned. These protocols kind of proliferated without any real users, most of them. They didn't have a strong distribution channel for their protocols, meaning they didn't know how to actually generate users trading in their protocols. The last point I want to make about the shortcoming of DeFi is that, especially after the market crashed by a lot, the reward for participating in DeFi were significantly lower. And the risk for participating in DeFi are still, I would say, medium, because you have risk with the protocols, a risk with the team, risk even with holding stable coins, right? And then you have the risk of the market. So here you can see in blue the chart of a project that pooled the liquidity, so the team abandoned it and let the users with nothing. And here we have a list of successful hacks that basically show you that DeFi has become a bit more risky for the users without providing necessarily a higher value compared to 2020 and 2021. So now I bring forward the thesis that we are adopting at Phemex, which is that it will be easier for a successful centralized exchange to move towards decentralization compared to another decentralized protocol to start from scratch. Similarly, in a way in which it's easier for a successful video game or a gaming company to adopt NFTs, for example, or adopt a part of an on-chain identity, rather than for a company to build a video game from scratch with the idea of this video game having a token, right? Here I go again over the shortcomings of DeFi and show how a centralized entity can overcome part of these shortcomings. For example, we said that these protocols tend to have very extractive tokenomics. They tend to take advantage of retail users without having much users without the dilution of the tokens. A centralized exchange, if successful, already have existing users and volume. I also said that DeFi protocols tend to copy each other, right? There is so many DeFi perps, trading protocols on chain, right? But exchanges have this ability of borrowing what's happening in the market, what's trending in the market, and implementing in their own centralized hub, let's say. So it's normal, especially after what happened with the evolution that Binance and FTX and Bybit and us took in the past few years. It's normal for an exchange, centralized exchange, to offer trading, spot, futures, borrowing, lending, APY products, all these sort of things. So centralized exchanges are already some sort of Swiss Army knives in terms of what can be done on-chain. They just have centralized operations. But I believe that this step is not that big to take. And finally, like I said, there is this proliferation of multiple protocols copying each other without any users. On the other hand, it's easier for an exchange, centralized exchange, to build a DeFi stack on their operation and using their already successful distribution channel for building users and volume. Now I make a final point that, as I said, I believe that the risk of participating in DeFi is medium to low, and the rewards are basically low. While for participating in a centralized exchange, I believe the risks are lower. The standards for security in exchanges have gone up by a lot after what happened with FTX. All exchanges now have a proof of reserve page, which is kind of like a TVL page. And just as someone working in an exchange, I can tell you, you can see a lot of what's happening in an exchange operation by looking at the proof of reserve page. You can see which exchanges are commingling funds, which ones are not. So I would suggest to take a lot of attention if you trade on a centralized exchange about their proof of reserves page and try to understand how it works, where are your funds, all these kind of things. But I believe that the industry is moving in the right direction and that we are being more transparent than ever in this regard. And us as an exchange, we plan to take a step even further, which leads me to my next point. So I mentioned this process of decentralizing, right? But what are the actual steps for building a hybrid exchange? So from moving from centralized entity to decentralized entity. Here I offer a second flywheel, an alternative flywheel, right? So let's say that in an exchange, the users generate volume, right? You can allow these users to acquire ownership of the exchange via the volume that they generate. And then, through the ownership that they acquire, they can participate in the shared governance and help shaping and improving the product. A better product with a lot of liquidity and a lot of trading activity will attract more users and kickstart the flywheel effect again. I believe this is a serviceable model for our future, meaning that we are trying to building this hybrid exchange following several steps. The first step, of course, is retaining our loyal and existing user base by giving them fair access to the token, doing a fair token generation events. This token should also be an instrument to share both the revenue and the governance. You don't want to share only the duties and the responsibilities to your users. You also want to provide them some sort of rewards, right? And also I believe that this approach will help developing a digital identity within the exchange because the users will feel as if they own part of the exchange and will be contributing to the exchange in terms of offering their suggestion on what to list, what kind of products they want, where do they want the liquidity, what's the direction that the exchange should be taken in the future. And finally, we maintain a very safe, secure execution from the tech side. We are a very strong and nimble team in this regard. So I believe that keeping this part of the operation centralized is also net positive because I think a centralized project has a very strong toolkit built in to list and build different types of products, especially compared with the DeFi protocols that tend to have smaller teams which focus on one specific product. So I believe that by involving a wider variety of participants in this sort of DAO that we are trying to build, we will be able to capture emerging narratives. There is a lot of talks about what's going to be the next big steps in crypto, right? We have the centralized data, artificial intelligence, NFTs are still, I believe they have a lot of potential. We have the metaverse and digital identities, which I mentioned, and of course, gamify is also like a still popular topic. So exchanges need to adapt very fast to these kind of new products, and they offer them to the users as soon as they want to trade them, right? But it's almost impossible for a centralized team to keep up with all the trends emerging in the market. It's much easier to listen to what the users want to trade because we have millions of users and 200 people in our team, right? So it's much easier for us to listen to the users and allow them to participate in the governance rather than hiring an expert in gamify, hiring an expert in sport to sponsor a team or something. So what is our timeline? We allowed our users to pre-mine the token for the exchange starting in Q2 of 2023, meaning that rather than diluting an existing supply of tokens circulating in the market, we allowed users to mine the token, generate them before they hit the market. This is a way for us to give our current users a fair launch and fair access to the token. So far, 100 million tokens have been mined, around 4 to 5 billion in trading volume, which is the equivalent of a few months worth of perps future for only those users that decide to trade these protocols. And then at the end of November, we will have two events, the TGE, of course, for the token, as well as a Dutch auction guaranteed 100% if people want to invest without being a VIP trader able to generate that much volume. We will release in Q1 of 2024 liquidity incentives for our institutional users and market makers to make sure that the liquidity in the exchange remains very thick. People can trade in and out of their position without any problems. And by Q2 of 2024, we will launch our DAO, which will allow us to basically start decentralizing the managing process of the exchange. We plan to involve institutional player, VIPs, market maker, retail users, affiliate partner makers. So all these kind of our partners will be able to join and govern the parts of the exchange that relate to their experience. And finally, I hope by the end of 2024, we will have a fully hybrid exchange. By fully hybrid, I mean that the governance and the revenue will be fully decentralized, while the operations in terms of the tech team, business development, will be centralized. And I think it's a fairly achievable goal. We're moving in the right direction. I think the timeline is also realistic. So what is the future of all exchanges? I would say that the landscape of exchanges is now more complex than ever. There is a lot of different players in the industry that have been successful in different ways. When we started off in 2019, we had 4 trading pairs. Exchanges were very, very simple. Now exchanges need to have futures, spot, APY products, borrowing, lending, sophisticated derivatives, as well as gamified tokens, NFTs sometimes, and some relations to sports fund tokens, and all these kind of things. So exchanges have become so complex that they need to find a way to branch out into these new fields, right? And for us, this is our step into decentralization. I believe that the past few years show that exchanges are one of the few protocols in crypto which are actually successful in terms of revenue, right? So I think it makes sense for exchanges to be more proactive in the industry rather than reactive to what are the existing trends. I think so far maybe only Binance have been able to be proactive in the market with their BNB chain. And I think now other exchanges are seeing what they have done, and they're doing what Binance did in a smaller scale. Bybit has their layer 2 mantle. We are trying to build our own DeFi stack built on our exchange, and I think this is our way of growing in the current markets. We are a bit younger than Binance and Bybit, so we have to take things one step at a time. So yeah, I hope this presentation was interesting. If you have any questions, I'll be happy to chat with you. We have a booth at the first floor. Thank you very much for the organizer. Thank you, Davide. Andrea, Alessandro, thank you very much.